So the second biggest mistake, and this is the order that I would be recommending to uh, knock these off in your business, is not having a budget in place. That's probably the key thing. The budget is basically a financial blueprint or a financial strategy on how your business can make a profit and pay your wage. So that's why we want to have a business budget in place, because you're running business, it's not easy at the best of times. And not investing properly in the finance and accounting function of your business can lead to things like not having a budget in place. So you don't know what margins you need to have to pay for your overheads, or what gross profit margin you need to have to pay for your overheads. And those overheads should include a wage to yourself, like proper wage, whatever the market rate is for your job, and also for your business to make a 10% net profit. The tool, like we talk about tools, you guys all love your tools, right? So we're talking about on-site tools. You're going to pick the right tool for the job. You're not going to buy the wrong tool for the job. Now, off-site, back in the office, the tool you need to make a profit in your business, or to plan to make a profit in your business, is a business budget. Now, the risk of not having a budget is that you build a very successful business in terms of operations. You're doing a great job. Customers love you. Um, there's no rework, high quality. You can pay your employees and suppliers, but you're not able to pay yourself what you deserve. Now, I'm not going to ask anyone to put up their hands, but in my experience, businesses without a budget, 8 out of 10 business owners in that situation would put their hand up and say that they don't feel like they're paying themselves what they deserve for what they're putting into their business. And that's actually why you need a budget. We need to set the finances in your business properly to get you to pay yourself. The second risk of not having a budget is sometimes, uh, businesses without a budget are not able to pay their employees, suppliers, or loan repayments, or the ATO, and the cash flow can start to spiral out of control. Payment arrangements and even payment arrangements with suppliers, and it's just as soon as the money comes in, it's just as quickly going out. Now, the reason why this is number two is that if you've got poor quality bookkeeping, it's very, very difficult to do a budget, because having your bookkeeping organized makes the budgeting so much simpler, because things are organized and categorized properly. So if we think about that example before where I said an electrical business had 34 accounts for motor vehicle expenses, there's just a lot of work in working out a budget for each of those 34 different accounts. It doesn't need to be that complicated. So high quality bookkeeping makes budgeting easy.